You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good morning, Quasar Markets Live. I hope everyone's having a great Friday. BigBeat, how you doing today, my friend?
I'm good. I'm going to call it Aloha Friday. I'm going to wear my silk blue Hawaiian shirt because, look, it's been a mess all week. The volatility's been super high. But I think the key to this whole week has been one thing, that we're actually going to end up on the higher than we were when we started on Monday. That's a big deal, right? Higher lows, and I get it, a little bit lower highs, but the market sentiment is now changing. Clarity is starting to hit a little bit. We know the world is splitting. I talked to Jim Iorio yesterday. If you didn't watch that interview, definitely watch that one. The world's splitting apart. Michael Litt said the same thing, right? Look, China and Russia are getting together, and United States and the rest of the world. So I guess I'm going to have to read my end of times Bible, Quran, all the fun religious books, and that's exactly what they're saying, right? The world's going to split apart, and we're all going to go to hell in a handbasket. I don't think that's going to happen just yet. I think we're okay. Look, it's been a rough week. My phone has blown up all week in regards to this, and I think we're okay. We're not out of the woods. We got a 90-day reprieve, but things are clear, a little more clear. Look, China just threw another 100% on us, or whatever the number was. Silly. We threw 154% on them. They're going to throw more on us. It's just slinging mud. Now, when the saber rattling, as we call it, begins to get to be more boots on the ground and more talk about war and not silly Nike shoes being a trade war, then I'm okay with that, right? Let's go with that. So right now, I'm okay with this. I'm still long. I'm going to stay long. I'm okay.
Okay. Qs are up about 22 basis points. SPY's up about 30 basis points here as we are looking at things. CPI numbers came out. PPI numbers came out. Both of them pretty good. But you brought it up, the dollar. Doesn't seem like the world agrees with you that everything's okay here in the U.S.
But you know what? We've said this. If the dollar comes down, it makes our products cheaper for the international. So if we raise our tariffs, great. It doesn't matter because the cost to buy the product has gone down quite a bit. If you think about it from the perspective of just this last 2-3 weeks, we were bouncing around 104, 104.50, 105. We're under 100. That's 4% difference. So there you go. If we raise our tariffs 10%, we've only really raised them 6% because it doesn't matter. It's about the cost. So we don't really care where the copper goes. Look, I was in Japan not too long ago, and I was buying in the yen, and a dollar was strong against the yen, 165. I was happy, 165 yen to the dollar. Today it's at 142 or something like that. Look, I like that stuff. Look, now I can take those back in the bank and say, hey, give me back my dollars. I just made some money on that, right? No, the truth of the matter is that, yeah, it's going to be harder for Americans to travel overseas, but they're bringing it here now. So they can buy a lot more products here.
Are they going to come?
That's a good question. The Canadians are still not happy with us. They are selling their houses here in Florida and in Texas City. But yeah, look, forget mainstream media right now. Just worry about our own selves. Life is still not that bad. Everything is good. The sunshine hasn't changed in Florida. The only thing that's changed is the guy behind the stick in the Oval Office, the bully pulpit. So look, we haven't changed as Americans, and everything is still the same. So look, I think that when you look at stocks and you're looking at those kind of things, all of a sudden it becomes a lot cheaper to buy our product. So I'm okay with that, right? If we make things here, then they're going to buy our things too as well. So the dollar is really slipped here, and when the dollar slips, guess what goes up? Everything else around it, gold, silver. It should push up a little bit of light sweet crude, which it hasn't, still 59.50. I know I saw it dipping this morning under $56 a barrel. Wow, that's recession numbers there. But you know what? Look, let's get that VIX down a little bit. I said this morning that the shorts are going to cover. They're already starting a little bit. I get it. They still feel like they're in charge. They're really not. They're really not in charge. If you go back 6 months or a year, we're still above that, right? So I'm not too worried about that. I think that the leverage has come off. The leverage of all of the stocks and all of the crypto has come off, and now people aren't levered up as much. So I'm okay with this. Yeah.
Awesome.
Seeing the VIX now here, VXX now 81.24 now near the highs of the day, but I'm just not worried about it. 82,000 back on Bitcoin there, Howard. I mean,
Yeah, nice little move to the upside. Yeah, Steve Flanagan says so the 10-year rate is higher,
yeah,
the dollar is lower. That defies logic.
that's
What's
correct.
really going on? Yeah, I mean
He's
that's what
right.
I'm saying. There's just a lot of things I don't understand right now. You talked about it a month ago that you weren't doing much because you didn't understand what was going on. There are
Still
things
though.
that aren't moving in all the ways for me right now that make me warm and cozy around the world. They just disconnect. So got to figure out how that disconnect comes back together personally here. As
But
you
we're living in a new world, Howard. I mean, I think you're absolutely right that the normal notions of how the world works in the past isn't really happening to us now. But if you heard from Michael Litt yesterday, he said that there's 3 times in our U.S. history that it looks a lot like this. And I wasn't around for any of those. 1973 and 74. You'd have to go way back. That's 50 years. So there's not many people that were trading in 1973 and 74. You would have to almost be in your 70s still trading, right? And the other time before that was 1880s. And before that was you have to go even further back, right? And there's William McKinley a little bit like today, but he called it mercantilism. He called it an old English mercantilism, and neo-mercantilism is what we're going through. That is crazy. Where we have a country that's trying to just close up the borders. Trump talked about it yesterday. He wants to put more walls down in the Mexico border. Sorry, they're not coming here anymore. I like going to Mexico. I enjoy going to getting margaritas and hanging out with the people. I really love the Mexican people. Look, I don't really understand that. I love Canadian people. I love going to Montreal all the time, Montreal as we call it. So we need to stop the bickering about how it's a closed world. That's not going to happen. That's why the dollar is slipping here a little bit. And Steve Flanagan's 100% right. The 10-year going higher and the dollar going lower. That what he's saying is, and I'm looking forward to talking to him about it, but that he's saying that the safety haven, right? That for some reason people aren't putting money into the bonds for some reason. They should be, right? The bond numbers should be coming down. The rates should be coming way down because it's a safe haven. And they're having to raise rates to get people to attract people to buy the directs and the indirects. I heard the number for the bond. I heard Santelli yesterday talk about it that I don't think he gave it a C plus or a D minus, something like that, an auction because nobody was buying it, right? That's a problem. So where is the money going to? Is it going to the mattress? I don't think that's the case, right? We're seeing that they're slowly putting it back. They're putting it back into crypto because Bitcoin last week was at 72, 74, right? That dip, and I think you bought at 75 again, right? Well done, sir. But they're going to put it back in the stock market. It's going to be a stock pickers market. So I'm okay with that.
Nice. Yeah, we had some big earnings today. Wells Fargo, JP Morgan, BlackRock. Any of those you interested in?
Well, as the market turmoil continues to chop and volatility continues to chop, they're a trading house. So trading houses usually do pretty well this time, right? They might be looking at buying bonds. That's what they do. They also are the indirects and the directs. And they could be doing that as well. That's big money for them. As I think, I hate to say it this way, but even Jim Cramer was right yesterday, saying keep our eye on them because if what they do, the world does. I'll tell you this much. Jamie Dimon is a very smart man, and David Solomon are very smart people. They look at the world from the eyes of wealth management. They don't look at the eyes of just politics. They not only see but know what high net worth individuals are actually doing. They know they have a quicker picture for it, right? Whenever I want to know what's going on, I try to turn my attention to the people that actually know. And I'll tell you right now, they are doing exactly what everybody else is doing. They're looking at the old way of doing things, including the Fed. We are living in a new world where ChatGPT and Perplexity and Anthropic and Copilot are giving us better, clearer pictures about the world, and that's why we have built it in Quasar markets. I want to know before they know. They're on the forefront. I want to know before them how the world is reacting to different things, right? I think that you're going to see a whole different type of trading. Now, I'm not going to say that I get my news from Drudge Report, but I did see Drudge Report this morning, and I did see one article in there saying that we could see robo trading without the intervention of humans, meaning that the algos aren't actually set by humans, that eventually the sentience of algo trading will be done by AI. So that changes, because I can't read what a computer's mind does. And people will say, well, the computer mind is only based on what you program into it. Nope, not anymore. Because now the machines are becoming very, very smart. And they're remembering everything that we're saying, even if we don't remember what we're saying, right? ChatGPT came out, and I love it. The memory on ChatGPT now goes all the way back to the beginning of what you said. So no longer, I cannot change my thesis all the time. It's going to know what my old thesis is and what my new thesis is, and tell me why I changed it or what they think made that change, right? And that's good. So I like that.
Yeah, that's cool stuff. Absolutely. Most of the CEOs coming out pretty negative in general. From the banks talked about putting more money aside in case of loan defaults. Larry Fink describe current client conversations dominated by uncertainty, anxiety, like you talked about. If anybody's getting insights into what the wealthy people are thinking about, it's the company that has the largest amount of money under management. A takeaway for me there, for those of you that are wondering if you've missed it when it comes to crypto, even as great as IBIT has done, and he talked about it's the most successful launch of a ETF ever. It's still only 1% of their long-term revenue right now. $3 billion in inflows, there. And I noticed that in this time, they now have 107 billion in net inflows into their ETFs. So we do see so much money that are in these ETFs now for sure. But those were his comments in general.
I heard yesterday Michael Saylor's talk about if Bitcoin goes to 50,000, he's done. He's kaput. He's bankrupt. That could be, I don't see that happening, right? I don't see him. I think that Bitcoin is now being held up now by JP Morgan, Goldman Sachs, all of these ETFs. People are looking to buy now. I think the days of us buying it at 19,000, 12,000, and 15,000, all those ranges that we were playing with back in the day, they look so far away, right? And I think that's what we have to look at now. Is 70,000 the bottom, Herr Howard? Is this where we start to see that's where the capitulation was? And I think so. Look, I've just allocated some cash ready to go to put into something today. I will be buying something on the market here. Steve Flanagan says, smart but a machine. Regulators, old people never allow total autonomous trading. That's the past, Steve, and I'm going to disagree with you. And I look forward to talking to you today about that. I think, you talk about it from the perspective of options. I would have told you as an old person myself that no way zero DTEs would be allowed on the floors. Today, it's the biggest amount of money being traded on anything, right? Zero DTEs. So the world has changed. If you talk to me back when we were younger, Steve Flanagan, what I understood Globex as the world trading all around the world all the time, turning on at midnight, I would have said no. I remember not getting any sleep in the futures pits, right? I mean, you'd get back up because the Chinese were already trading around us, right? Now the volumes were low. I don't think so. I don't think the robots care about us. I think they're going to do their only thing what they're only meant to do, and that's make money. And so we got to be faster and quicker. So, I really think that it's going to be good.
Have you seen anything hit? All of a sudden, we've dropped way down in the last 10 minutes here.
I haven't, but I expect it to be a little bit of profit taking here in the morning. We got 15 minutes to the open. I think that's all it is. You're right. Every morning we've seen algos tick a little bit. I don't really see any news.
Yeah, I didn't see anything.
This morning, I know the PPI
actually since the
PPI numbers came out this morning.
That's what I'm saying. Since those numbers, we had been sort of melting up. That's why I'm a little confused here, trying to see if something must have popped somewhere. But yeah, and the same thing. What I've noticed it's the bank selling off. So JP Morgan, that was up 1.3, 1.4% in the pre-market, now down 1.3. Morgan Stanley again was up a little bit, almost a half a percentage point, now down 2% after their earnings, and Wells Fargo is now down 2%. I have all kinds of info on all of these earnings. They were great earnings across the board. So a little surprising. I mean, if you look, here's Wells Fargo's numbers right here. They had earnings of $1.39, beat expectation. They were up, like I said, 7/10. If you look at their net income, it was up 6% year over year. Their EPS surpassed the $1.23 estimate. They're actually lowering their credit loss provisions to $932 million, a slight decrease, so they'll have more money to lend out. They're doing share buybacks, $3.5 billion. It's going to reduce the share count by 7.7%. You know, I'm just blown away by reactions right now.
When you have cash,
like everything here is, man. And then, like, again, I go to Morgan Stanley. You know, you talked about it. You said, what do you want to see trading? 45% increase in their trading revenue first quarter. You know, these are the things that are great news. Look at that net revenue, 17%.
You have a pile of cash
last year. I mean, and these aren't trading. I'll have to look. Let me pull up Morgan Stanley here to pull up what they're trading at EPS wise, but I can't imagine it's above a 20.
When you have that much cash on hand and you have no idea what else to do with it, and you think your stock price is undervalued, what do you do?
Yes, 14, Steve. They're going to reduce their shares by 7.7%. And they're down 2%. So that's the disconnect.
Well, they haven't bought those shares yet. They're talking.
No, I know, but these are the things that are going to happen that I can look ahead and say, okay, you're trading at 14 times price earnings. You're going to reduce your shares over the next quarter by 7%. You just had a 17% increase in your net revenue. You topped EPS, you topped revenue. Again, if I keep going through their stuff, their institutional securities generated $9 billion. Again, people are seeing strong client activity like you wanted to see. Their wealth management, the rich people, again, $7.3 billion in net revenues, $94 billion in new net assets, almost $100 billion in new net assets. And I'm not telling anyone to buy, and I haven't done a ton of research into Morgan Stanley. They're not one of the ones I normally look at, quite honestly, but I'm looking at this earnings report and saying, how can this be down 2%? This could be a great buying opportunity, like you said this morning, just looking at them, same thing.
But when you look at it from the perspective of it's banking, it's old banking. Right? We're talking about new banking. How has the world really changed? And I think that's the key, right? Look at it up, 82,000 on the Bitcoin there. That's the new banking style, right?
But then your answer would be BlackRock, right? They're at the forefront of anybody is, in my opinion, when it comes to the huge financial guys, it would be BlackRock. And again, they had great earnings. Although I will say my concern for them that I saw performance fees. So I have a figure here. They dropped $60 million. Still $200 million.
Fees gone down because the market's falling.
They're not doing as well, right? They're not doing as well.
But also,
I also noticed that people are doing more stuff on their own without them because they're Aladdin.
Those fees, you're absolutely right.
Yeah, Aladdin's revenue generation was down a little bit. So I did see things. Again, I'm looking into these. I'm not a perma bull or a perma beer. I look at these to see the things that matter to me. These are the things that I put up here. This was the stuff that I matter to me. Again, they're $84 billion, in net inflows. Most of it's coming in those ETFs. So you got to keep that in mind. It's not as much giving them money to manage, right? It's those of us that are just using IBIT as a way to hold Bitcoin or GLD to hold gold.
You know where the second biggest pile of gold is in the United States outside of Fort Knox? See, Flanagan, you know that answer where the most pile of gold, physical gold, is being held?
I have no idea.
It's in New York City, downtown, underneath the JP Morgan building, right? And Goldman Sachs has their own vaults too. There's a ton of.
And again, JP Morgan's, not to leave them out. Their net income rose 9%, $4.63 a share. Revenue increased 8%. Their trading revenues went up 48%.
New York Fed, that's exactly right. There's a ton of gold up there, boys. Right in the city of New York. I mean, the Gotham City, and that's why they had to make the movies Batman, right? Look, it's very simple. Gold's at 32.30 now. It's on the highs of its all-time highs, right?
Oh, yeah. mean,
I mean, we're going to 4,000.
over the last 2 days. So I mean, that's where money's going right now. Now we'll see if it comes back from there. But right now, it's definitely moving into safe havens and commodities. That's what we are definitely seeing.
I had a chat yesterday. I was reading what he was writing, and I quickly spoke to him. Nuriel Rubini, who is Dr. Doom. He's not talking Dr. Doom anymore. He kind of likes the things that are going on, the changes that are being made in order to slow down the speed and spend of the government. And he's talking about how the world is rechanging a little bit. I think he says bottom-up microanalysis is matched by top-down macroanalysis, 4% by 2030, 6% by 2040, exponential growth. He is becoming the Dr. Doom to Dr. Boom. So, these people.
Yeah, but I wonder, is that a political thing? Is the reason he has been so negative for the last 4 years because of who was in the White House, and now that's different. So, that's one I always keep an eye on.
Could be. I'm going to, could be. I mean,
I've seen that change with a lot of what I thought were perma bears on my timeline that all of a sudden, since the election, have become perma bulls and the opposite. So same thing where people that were so bullish now think that the world is ending, which it's not.
I'm not a perma bull or perma bear. I could care less. I mean, all I care about is going the direction that I think it's going, right?
Absolutely.
You got to play that in
front of you.
Yeah, but I look right now the world is not perfect. It's not good right now. And we heard from Michael Litt yesterday saying, look, there's only 3 times that the history that we've actually looked at like this, and none of us have lived through it. So in every time we talk about this, and I can tell you, Steve, I'm looking forward to it. You know what? If Steve's around, we'll just bring him in. What the hell? If you're okay, Steve,
he might be driving this morning.
Might be driving, yeah.
Okay. If you are around, Mr. Flanagan, feel free to come in early. Absolutely.
But I'll tell you right now, silver is also doing this thing too as well. I mean, 31.60.
Navarro, yields coming down is great news. Is he looking at the actual rates? Does he have a different thing that he's looking at?
Well, I was going to mention that this morning, and if you look at our Twitter feed this morning, I encourage everyone to do it because I did a PhD analysis of the PPI this morning. I will tell you that this was a surprise to the downside and a quick move, because headline PPI month over month, we were expecting up 0.3%, but we came down by 0.4%. This is exactly what the Fed asked for. Okay, Mr. Powell, you asked for this, we gave it to you. All right, core PPI and headline PPI. Headline PPI is now 2.7%.
The problem, though, is Fed's Collins would expect inflation well over 3% due to tariffs. This is, the things hitting the line. I'm with you. This is the disconnect I'm talking about. At this point, the expectation is Fed will need to hold steady for longer, says Fed's Collins.
What tariffs? He just put a 90-day moratorium on
it. That's what I'm asking. That's where I'm confused right now today. I've felt very good about feeling where the market was over the last few weeks. I've done very well in telling everybody every day where I think we're going to end up. And right now, it's like one hand's not talking to the other. I don't, I just don't.
I'm going to share my screen real quickly with this, Howard. I'm going to pull it up now. You can see that.
Yeah.
This is the monthly change in the PPI. All right. Yeah. And this is core PPI and headline PPI. If you don't know the difference, there's it's like the main core stuff that we actually use, gas and things like that. Okay, this is headline PPI, which is everything. Look at that, boom, down 40% change from where we were. Wow. If you look at it from a headline PPI, we're still only down about 0.1%, but we are still changing it. That is a huge change. That is a huge change, and I think when we look at that from that perspective, I'm going to stop sharing my screen now, but if you look at it from that perspective, that's changing the world. That is what, now, this is what I said on my show yesterday. I said, here's the problem that I always see with the Fed. And Howard, you know this better than anybody. I always hate it when the Fed changes the narrative and changes the goalpost. And they're going to do it. They already are doing it now. Oh,
they already started.
Now it's this, now it's that. they don't know what the narrative is because they never
Well,
change.
now Collins is basically saying that's a backwards looking number, but it's this number you've been using for the last 40 years and for the last 5 when everyone's been telling you it's backward looking.
And it
Um,
tells you that they're behind the 8 ball, right? They're behind the curve.
yeah, yeah. Yeah, like I said, there's just things that shouldn't be moving in tandem or opposite from each other right now when it comes to sort of the major things, the dollar versus our rates versus gold versus other commodities that have me just wondering what people are thinking out there.
I tell you what, if Bitcoin drops anything today, I'm going to be buying it. Anything. I mean, if it just drops
I
down
like
to
it.
80,
It's funny you mentioned that. I looked at it before we came on to give everybody a figure. I think my 75 figure is now looking at like 79,500 for
okay.
my 79.5. You can see I'm sorry, I don't have my. I'm not sharing my screen.
But remember, Howard, when the world was ending and we were buying it, I was buying it at 77.3, and the world was ending back then, and we're looking at 82 now. I mean, that's an 8%.
I do think my day of 75 to 80 plays over. It looks like we're now going to be looking at like an 80 to 85 play on the rinse and repeat till we can break those cycles. And I'm good with that. Move up $5,000, do it again. Move up $5,000, do it again. But that seems to be our range right now on Bitcoin. We'll say most of crypto was holding up really well today. In general, Ethereum up 2.4%, Ripple back above the $2 mark. Solana back at 119 again. When we talked about Solana, when it dropped down here, anytime you can get Solana down under 100 again, I think it's almost like the Disney line that you have. It's a good spot to get it. Cardano's really dropped down too, back down to 62 cents. That gets interesting down here. And one that I love, the ones I love really right now are to keep an eye on Chainlink and Aave. Those are the two I'm kind of watching right now, Chainlink and Aave.
I'll tell you something that it is interesting, and we talked about the split of the world between China and Russia getting together. But I did see where Trump's Middle East envoy, Steve Witkoff, who he really relies on a lot for this, and Steve Witkoff is probably a smart man. He does know the Middle East very well. He was in the State Department when I was there, and I could tell you that they're meeting in St. Petersburg. So I think that we could see a thawing of this Cold War between the United States and Russia. It won't be perfect, but this morning we saw the numbers come out of Russian trade flow, and they did record a $10.5 billion trade surplus, which is better than the $8.9 billion they had previous year this time around. But their exports contracted another 3%. By 30.9 billion. So, and their imports sank by 10.2 billion. So they're not, look, I think people look at Russia like this huge behemoth. They're not the biggest economy out there. They're not on the US China scale, right? And I think people sometimes don't really understand that all the time. And when they don't understand that, then it's a little out of whack, right? We don't want to see the Russian people hurting because
right. But Russia's advantage is their agriculture, so to speak, and their raw minerals and vast holdings of land. But they are not a very technologically developed country when it comes to the general nation. Their defense and things like that.
They're now saying we will be in the crosshairs of trade wars. We'll just have to deal with that trade war impact.
Yeah, I mean, and that's what it is. You figure things out, and I guess that's part of what also, what I noticed is that, our buddy Macron starting to rally, against the U.S. again, our buddy up in Canada rallying against the U.S. again. So we're starting to see the anti-Trump parts, kick up, and I think that sort of talked away the narrative that it was the U.S. and everybody versus China. That it was a done deal, so to speak, that was the world order. And I think that's what's still at play. I think that's what's got everybody so confused. And for me, that's exactly it. It doesn't seem that maybe every nation wants to embrace us as it looked like we did 2 days ago and it was sort of like the big bad person's really China. So we'll see how that plays out.
But if they want our movies, if they want
they want our stuff, they're going to have to get it. I get it, but again, they can make it harder, right? That there's just things that it does. Again, the reason we mooned up is it seemed that all, there were 90 countries ready to do this, right, and ready to come to the table. And what we're sort of seeing is they're still sort of reluctantly coming to the table. So hopefully we can get them, there, and this thing moves across. But I think some people are starting, because the CEOs, I said this, right, that if the CEOs gave, things that still said, hey, we're still worried, we see markets still worried, and we see it that QQQ is now down 16 basis points, and the SPY's negative, and everything's negative on the open. So the world didn't get any worse overnight. What it is people are still a little scared.
Well, it did for the United, and we're open now. I think we push up. I'm not too worried about the day. It ticked down 130, but I think we push up. I think the shorts start to cover. We might just literally just melt up all day.
Yeah. I don't
Trump
have.
says we are doing really well.
I'm going to wait till closer to 10 to give you my prediction there. I just don't. I think it could go either way today. I think there's still scared, very scared people there, and at any little bad news they seem to sell. But I do like what I'm seeing on Aave so far. Nice move up, 134.72. Tick not too bad, down 147. Advanced decline actually positive, so we like to see that. VIX 43.90. That's part of my issue too. The VIX still isn't coming down anywhere near where we need to do to see some of that breathing room that I think also gets people feeling a little bit better.
Jack Dorsey, former CEO and owner of Twitter, just said, Bitcoin will make the current financial system feel as irrelevant as the fax machine.
Yeah. Well, I mean, let's keep in mind, Jack. I love Jack Dorsey. As you know, he is as big a Bitcoin maxi as it is. So again, I like to play the voice of reason here sometimes. This is a man who outside of Michael Saylor probably has more personally vested into Bitcoin than any other person on earth when it comes to his business. I mean, again, he gave up Twitter to just go after Bitcoin as a business, and that's what Block. That's why he renamed Cash App and Square and all that stuff into Block, is that it's blockchain based, and he is doing everything on Bitcoin. I do. He's the one that really wants to be the bank of Bitcoin, as much as Saylor does also. That Dorsey's building that. He's building out stuff on the Lightning Network that will hopefully, help that transformation.
Tick just dropped a little bit here.
Yeah, that's what I said. I just think this is algos, though. We'll let them fight it out. We'll watch it here. I am a little bit of a skeptic today still. I just am. I mean, I just
keep our eye on the dollar.
I wasn't. I was actually. I'm going to be honest. This is where I say you got to play the market in front of you. I came in watching the banks all move to the upside pre-market on their earnings. It matched what their earnings were doing, and I said, okay, this is looking great. I'm ready to put some money in, and they're starting to recover here, and hopefully we'll see that move to that direction. JP Morgan only down 25 basis points now. But that's what's got me nervous. If people aren't buying on good earnings, on stuff that, like we said, it was 14, price to earnings ratio, we're not high on it, and they had good earnings, and that's all good news. It shouldn't go down. So that just means we get scared people still. 443.35, moving to the low of the day here on the Qs. Gold's what's winning, baby. I'll tell you that. 32.42. You called it, Steve. You said it wouldn't stop at that 31 when everybody else was sort of calling for that to be a top. You said you just see it keep on rising. Didn't notice, where did silver go on my sheet here? Did something change with silver? No, there it is. 31.70. So that's up 1.57. WTI trying to get back above 60. Steve, there's one where I'll tell you too, again, that it seems, and I guess I'd have to ask you this. What should be the lag between the WTI and the price at my gas station?
Okay.
So, I ask because I don't know. This isn't a setup in any way, shape, or form.
No, that's
I don't think I'm going to jump down your throat. I just want to make it clear. I don't know this, and you are great at giving this kind of info.
Are we doing this for oil today? I thought there's a big pop in the markets. Listen, okay, so very simple. Oil is in the ground, underneath, whether it's under the water, whether it's in a different country like North Sea or in the Gulf, or it's in the Louisiana Gulf of America, or if it's in Louisiana or Texas, it's in the ground. All right. The price of WTI, light sweet crude, is different than the heavy oil, which is North Sea. All right. So oil, with what's called a crack spread, the difference between heating oil and all that stuff. Oil itself, all right, is different. It has to be refined. It has to be produced, right? So we have these refineries. By the way, there are not a lot of refineries in the world, and they're very old, and they need to be continually kept up. And it depends on what we need. Do we need gasoline? Do we need more lipstick? Do we need more plastic chairs? What do we need? So oil is broken up into several different pieces, and that's how it happens. The machine, in order to get the oil out of the ground, we got to pump it. So there's pumping. There's a cost to that. So what the barrel of oil is based on is what it costs to get it out of the ground and the carry trade. All right. And then there is the price of oil in the future, contango or backwardation. Is it going up or is it going down? And is whether people are buying it. Now the price has to be questioned about what are they breaking it up into, and it goes through refineries. So all these shippers, these big trucks that you see on the or pipelines that move that around, now move oil around, right? And then there's gasoline that can be moved around. All right. By the time it gets to the gas station, or let's say it gets to out of the refinery, it's in gasoline, then it has to be transported again in trucks and semis, right? Or in other ways. And then the little state governments of all the little states have different taxes on it. If you don't know, most of the price of gasoline is not gasoline. It is the price of the tax that goes on it that paves the roads. That's what paves the roads, right? Gasoline tax, which is what a lot of the EV people are scaring people, because if they don't have to need gasoline, then they don't have to pay tax, and they go on the road, they pay for free. That's how the difference is. So that's why it's different in one state than the other state, because mostly taxes. The margins that these companies make on it are very small, unless oil gets to $90, $100, $110 a barrel. Then the margins get really crazy. And then what happens is all that stored oil, that contangoed oil, right? Then they get bought out of storage. Then they bring it out. Then they put it out there, and they wait till the price. Because then the pumpers go crazy getting it out of the ground. When the price goes down, they slow it down, supply and demand. So that's pretty much in a nutshell how oil works.
Okay. Yeah, that's what I was curious, because I thought I'd see my gas a little cheaper. It isn't yet. Steve, I got a great line from one of your friends
in Florida, very cheap.
That he's got one here. If the S&P holds where it's at right now, it's going to be up 3.8% for the week. It's the best week since November 8th.
That was literally the first thing I said out of my mouth this morning was, no better how bad the market was all week. And
he says, raise your hands if you thought it was a good week. You did, but I mean, it is funny. I'm feeling beat down on Friday. Like what has happened? And that's just the volatility.
What do I always say, Howard? I want to be the ticker taker. Yeah, when the world is going to shit hell in a handbasket, I'm the guy going, Thank you. I'm going to buy. And we did, Howard. 72.3 on Bitcoin. We did buy. I bought NVIDIA. We did it on the air at 105. It's at 110. It went even higher the other day, right? When the explosion, the upside. We know. We were here, and we did it live on the air. So if you're listening to me and you weren't listening to the other nutballs on TV just because they think that they're on
Bitcoin
TV.
Bitcoin at the high of the day, by the way.
Thank you. I called it earlier today, right? I'm not nervous about this market. I think we're good. Look, the volatility is still a little crazy. I get it. I know people are still nervous. What do I do? My phone has not stopped ringing. What do I do, Steve? The people that are dinging me, like, I don't know what to do. I said, well, how sad are you? Pretty sad. Well, to tell you, time to buy. Great, right? When you don't know, you need time to buy. If you don't know, listen, Howard, everybody, I tell everybody the same thing. Pull up a big chart of the Dow Jones Industrial Average. The stock market only goes one direction. Only one. You know what it is? It's up. The question mark is time. How much time and when did you get in and when did you get out? It doesn't matter as long as you expand your time horizon. The markets only go one direction. So if you feel
with that being said, if you bought the Dow Jones in January 10th of 2022 and you held it to yesterday, you did not go up. You're at the exact same level.
Well, you're still up, though. You're still up from where it was. But That's right.
No, you're not. It was at
You gotta
39.
be
It was
the,
at
but you
36,
have to be
854.
the worst trader in human history, right? To do both, and it's okay. Look at that. There goes Bitcoin, 83.2. For those of you listening, I told you the dollar falling apart. Look at that. Dollar popping now back to 100. I had no feel. I said that. I like this.
Q's a positive nicely here, 18 basis points. As Steve said, he thinks we go positive through the day. I'm reserving my decision for a little bit later here towards the 10 o'clock, but it is looking good. What did I just do?
Now,
here?
when does the 10-year go up and the market goes up like this? It's just telling you everything, right? That everything's out of whack. It tells you one thing. There's a lot of cash in the sideline, probably a lot.
Well, and the market's not necessarily going up. We've seen these early morning pops.
Okay, here's what we're hearing now. U.S. warned China against retaliating in a private talk. CNN now just told us China is requesting a Xi-Trump call happening right now. So this is what's probably happening right now. Look, I said this, any news, any little good news you see in the markets, we're going to go through the roof. There's just too much cash in the sidelines for me.
Yep. I'm seeing two different sides because I'm also seeing CNN reporter on X and private talk hours before China announced new retaliatory stuffs that Representative Greer said there's still no trade talks with China. And Q's now down 23 basis points. Like I said, just nothing's holding. Dow down 50 basis points here. Advanced decline now down negative 1,200. We were positive 3 something.
Yeah, I mean, the volatility is out of control.
A little bit. We're going to see some move here.
Pull up a VIX chart. Pull up a 1 hour VIX chart over the last, I don't know, 3 or 4 months, right? And you're going to see this is crazy what we're seeing, right? I mean, this is nuts. This is not normal.
Oh yeah. Well, and I think this is part of it, right? I mean, you can't discount this. You know, traders, algos, things aren't used to working in certain ways when the VIX is at 44, 49 because it spends about a minute there in reality compared to, being at 17 or under 20, let's just say. I think that's part of some of these issues too. We'd have to ask Mr. Flanagan there. He's the expert when it comes to electronic trading, having come from that world. So understanding a little bit, how do they go this far out of the norms? I mean, I'm sure they do. They prepare for every eventuality, but the VIX continuing to rise at the highs of the day almost. That's got me a little nervous here too this morning.
For those of you who don't know, Larry Fink is actually on CNBC right now talking. So we're going to bring it to you as fast as possible what he's saying. He's talking the bond market now. He says we're pretty much very close, if not in a recession.
In a recession, yeah. I have those lines here for you that he
Hey,
had.
Bitcoin looks good in a recession. I mean, it's
money. Here's him. He talked about it. He also said that in the CEOs that he's talking to, that he believes most of them believe the U.S. is in a recession. Again, these are words from Larry Fink himself this morning during his earnings call that I took away. He did also warn of about a 20% decline in stock market still. So Larry Fink not talking very positive.
He'd love that, right? I mean,
right, again, more trading fees. Again, that's for him. That's
and,
what he wants.
He's happy to buy in the bottoms, right? I
mean,
mean,
absolutely. I don't disagree
so be careful when people say that, right? I mean, it's just, be careful. But 83.1 again on Bitcoin. I'm not too scared. I'm looking at my Bitcoin pile over here, smiling all the way. So I'm okay. Look at that tick. Just went off the charts for me. Yeah, went from negative 900 to positive 600 in less than a few seconds, right? I mean, that's what I'm saying.
Volatility is insane.
Yeah, I mean, look, China in the United States.
You're seeing half point moves in a matter of 1 or 2 minute wicks.
What did I say earlier? I said silver, now 31.77. We're going to 43 on silver. I still believe that.
I mean, look at these moves. This is a 1 minute chart.
Yeah, and your charts are worthless again.
450 to 443. 450 to 443.
I mean, the NASDAQ and Dow are now both in positive territory, and VIX at
It's
80.40. We've said this yesterday that if we can get below 80 again, I think we go higher. I think the market just really goes. But 80 seems to be where that's really high, folks. I mean, if you think about it, normal VIX is around VXX is a lot lower. The VIX itself usually around 15, 16. And listen, it's every month it has to reconfigure. So while we're not doing that for another 20 days, I'd be careful, right? Just be careful out there. NVIDIA now breaking the 110 handle. I had a feeling that would probably do that. I'm still, as you know, long from the 105.13 handle there. I'm still smiling all the way. NVIDIA, you know, I know Kathy Woods bought a bunch of NVIDIA a couple of days ago, 2 days in a row, I believe, right? That's a lot of buying. I don't base my trading on what Kathy Woods does, by the way, folks.
No.
But
yep, I mean, I still have it in my long term. I don't touch that stuff. I did my reshuffling about 2 weeks ago, and
but I'll tell you what, if Xi Jinping and Lee talk to the president and the finance ministers, you know, get together, Scott Bessent, Treasury Secretary, and they come out of that trying to save face from both sides. This is not a Dow 40,000. This is a Dow 60,000. Dow 60,000. That's 20,000 points away. That's what I'm saying. You can put that. You can write that down. It's already now, and we save all the videos. We go right because then there's no recession talk. Everything gets back to normal. 110.47 now, and the highs of the day now on NVIDIA. And I hate talking about NVIDIA, but we've been killing it in NVIDIA.
Seeing EU Commission. Oof. We will tax Google and Meta. So it looks like right now EU Commissioner President Ursula von der Leyen told the Financial Times that if the trade talks fail over the next 90 days, a possible retaliatory measure could be tax on ad revenue for companies like Meta and Google.
And that's
so there's the answer to, remember, I couldn't figure out how Meta would be affected by the tariff. So there's my answer.
Well, I mean, Instagram and all the that's all they have, right? Is ads. I mean, I think
Lagarde tells finance chiefs to let EU take the lead on trade talks.
I remember when the Senate was grilling Zuckerberg and says, "Well, how do you make your revenue? Is it by ads?" And he wouldn't answer, and eventually said, "Yes, sir. That's how we make our money, is ads." Right? So we know that it's not a big deal. Okay, we're hearing, of course, now China has considered allowing Western firms to act as market makers for its exchange-traded fund sector. So, Citadel Securities, Jane Street, and Optiver may be the first to benefit from the opening up of China's ETF markets. See, things are getting better here. The talk with China, it's getting a little bit too much, in my words, right? I think that any good news here.
450 here, move over 450 in the Q would be very positive here. It's trying 449.35. It is doing its best, trying to move up here. Let's see if we can get above that 450 and hold. That would be very positive. We've seen the advanced decline now again. It had gone negative. Now it's positive 600. So as Steve said, there it goes. Oh, almost. Q's got knocked down right at it. Damn. 449.82 it got to, but it's trying.
It's algo time.
Well, the algos are saying I'm selling it for just before 450. Yep. Absolutely. Advanced decline, though, moving up nicely here. Tick staying positive. So news does have the market moving up in general. And like Steve said, what you'll start to see here after 10 when the algos calm down is then the retail traders will need to do their short covering. So that's what I'm going to be looking for here, is to see at 10 o'clock if we see a move to the upside. That's where the zero DTE covering's coming. Right now, you've got a lot of zero DT players on hope and a prayer here that it goes to the downside.
And I know that Steve Flanagan doesn't like it, but you know what's coming out at 10 o'clock is the mission preliminary sentiment and expectations. I get it; it's a university number. I get all that, but it tells you they do a pretty good job of getting what the country feels. And right now, the country is not feeling good. So, look, I get it. Prior reading there was 54.2. They're forecasting 50.8. Anything under 50 is really bad. That means that they think the world's done. That'd be a 4% decline, or more than that'd be like 8% decline, wouldn't it? Yeah, like 8% decline.
Yep.
But if anything better than that, then okay. Nvidia slipping below the 110. That's still 110 there. Nothing here has changed here in my mind. I think 83,000 still on Bitcoin. If we can hold above that, I think we go one up.
Yeah, definitely. Bitcoin looking pretty good. 83 holding up nicely here so
It is a
far.
big dropping here. The BXX 79.78. I said get below 80, and we could see another run here. I'm not scared about this yet. I've said that for a while. I'm not scared.
450 is where they're selling. Can't get through 450 on the Qs yet. That's the key spot to watch here this morning. If we can get through that, I do think we could melt up, like Steve said. Continued rejection there, though, would not be a good sign.
80.50 now on 80.71.
Now it's the highest since February, so we're still seeing more of that.
I mean, Dow's up 100 points here. I mean, Nasdaq's struggling. I get it, but we're higher than we were. Not the.
Yeah, 3.8% versus where we closed last Friday. So that's definitely very positive.
And we wiped out all the highly leveraged shorts, by the way. So I have a meeting in about 10 minutes. So I see Steve Flanagan. If he's feeling good, can we bring him in?
Sure, you got it.
Steve Flanagan.
Good morning, Steve.
Oh, what a difference a day makes, right? I mean, I remember back in the day. I remember back in the day.
You do too much homework last night, Steve, because it's all useless today.
Oh, boy. You know what? This is a great example for the viewers, for us all, to see what is the latest and greatest technology. And I'll use that, let's say Formula One, an F1 race. Every year they come out with this new Fandango, and it gives the car a little bit more. Well, guess what? What you're seeing in the rapidity of these moves is the latest and greatest machinery executing trades in milliseconds, if not microseconds right now. And that's why we're getting these tremendous moves.
Yeah, it's been, unbelievable.
Yeah, and
volatility.
I wanted to bring up, Steve, I want to get you before you run off, but I wanted to bring up real quick, FX market, obviously the dollar is blue, but what is going on is an absolute breakdown of the favorite from the bond, the basis trades where they buy cash and leverage it and look for a financial arbitrage against the futures, which has led to deleveraging, which has led to hedging. Look at everything going on. How the FX world, we talked about the yen, safe haven. Well, secondarily is the Swiss franc. Why is the euro going up? Well, come on. We talked about on Monday about this IEEPA that the president used as his emergency power. If the bottom line, if they identify a country that is destabilizing our financial markets, our sovereignty, our security, what is the natural reaction? We will freeze the assets of that country. Who is the second largest holder of U.S. treasuries? China. They're up just shy of $1 trillion. There's no doubt in my mind, and again, to the viewers, I have no information on this at all. But when you see treasuries make a move like that, and then you see a flight out of the dollar into the euro, which is the largest traded currency with volume, so therefore liquidity. Remember, 7.5 trillion trades in one day in the FX market. It's clear that somebody has dumped part of their portfolio in the treasury market and quickly moved it out into the euro. That's in my view.
I have to ask you. I mean, you scared me a little bit there. Are you
Yep.
saying that the United States could possibly freeze the assets of China? That's war to me. I mean, if I was China, I'd be declaring war on the United States because that's their money.
In the fine lines of that Emergency Powers Act, what was it called? The IEEPA, that was, there would have to be an emergency declared. There would have to be evidence purported. But what I'm saying, Steve, is look what's happened in Iran, look what's happened in Russia with the freezing of assets. If China was really looking to up this game, and of course, when you see the tick for tat tariffs, what's United States now at 145%? China's now at 125%. Virtually, trade between China and the United States has ceased, right? With those type of tariffs.
Yes, but Steve, I mean, the world would look at us. The world looks at us as a safe haven. For the dollar at 99.96, the dollar would be worthless if we start freezing other countries' assets just because we don't like them.
That would be a catastrophic exception, and it is not what I think. What I do think is that someone clearly has set off a chain reaction of automated algorithms. When the basis trade broke down, the correlation trades break down, and I would think that, and we'll know the next time they release figures, who's dumped treasuries. I would say that if I was a foreigner sitting with a lot of treasuries, given all this uncertainty, I would think that clearly the dollar has reacted opposite to what you would expect as higher interest rates in the U.S. as the world is going down. Remember, next week, ECB, they're going to make another cut.
Right.
Yeah.
So somebody has totally said interest rates have no bearing on this. I need to exit a trade. And I think that's what's gone on. And it's set off a chain reaction of correlations. The numbers will tell us shortly in a few weeks who's dumped treasuries.
Okay. If that's the case, and I know that our Fed says that they don't talk to the other Feds. They talk to them, but they're not
Together.
They're not influenced by them. I'll paraphrase what Powell said the other day. When you look at Germany per se, and they are in a recession. I don't think anybody here just says they're not in a recession. They're hurting. You look at the Russia-China trade, and they're cozying up. We saw where Zelensky said that they had captured some Chinese soldiers on the border. All right. You look at it from the perspective of Japan and Taiwan. All of these places are places that we do business with. Taiwan chips, we do, believe it or not, Ukraine has software that we deal with. Believe it or not, we still buy cars from Germany that's in a recession. Believe it or not, we still have trade with China, even if there are tariffs. Believe it or not, we still trade with Japan, who wants to lower tariffs to zero. That's a lot of unpredictability on so many different fronts. You would expect the world to be a lot different. The stock market should be down 20%, as Jamie Dimon says. You would expect the dollar to be non-existent in a lot of ways because they're not going to us as a protection. You see gold dropping again, 32.23 from off the high at 32.40. See, looking at and we talked about this morning, as a high net worth individual, HNWIs, they call them on the floors. The Jamie Dimons, the David Solomons of the world are looking at what they're moving their money to. They're all thinking the same, right? That they said this, that they were nervous about the president. I think this morning I read from the Wall Street Journal that some people actually even think the president's kind of insane, literally. They called him insane. Some of them were concerned that he was unhinged. This is the leader of the free world. With all these problems going on, the problems that Biden couldn't control, the problems that seem to come out of even with Obama. What does a person that's a retail, what do they think? What are they making of all of this nonsense that's going on around the world? Because it feels like to me that it's the talking heads like us that are discussing high-level macro issues. What is the average person on the street that's just trying to do their damn job, thinking about it, going, What do I do? I want to buy a house, but I can't. I want to buy a new car. I want to buy, you know what? I really like that new BMW. I think I can afford it now. I'd like to buy that. But now there's this problem because of Germany. And there's problems with tariffs. And now there's this problem in gasoline prices. And and we see it and through inflation and through these inflationary measures. What are they supposed to start to think here, Steve?
Well, to look at what's going on at the macro level, this is shock and awe. I mean, that's what this is. This is the way, my personal opinion, it'll be over before people really start to put the pen down to paper and write about it. It'll all be over.
Okay.
It's the shock and awe theory. It's the way the financial markets move. If anything, the books will be written at, how many $1 trillion was lost the other day on an erroneous headline that they were delaying tariffs, right? I think it was $4 trillion on an erroneous headline.
4.7.
On an erroneous headline.
Yeah,
I actually wrote about this last year about market data, an erroneous market data setting off a chain reaction of events. So the average person at the retail level, it's shock and awe. It's meant to happen. This is by a plan, believe it or not. The guy's not crazy as people, but change is disruptive at the macro level to those with billions of dollars. And trying to figure out where to put their money. They're the ones all screaming and yelping all over the place because, they just lost probably 25 to 40% of their portfolio.
Right.
But as we saw the other day, how quickly it can reverse. So, shock and awe, it's over and done with before you even realize it. As I've been saying all year, my blast-off point is around the middle of May and June, when it's all behind us.
So as a trader, are you saying stay put, relax, chill out, turn off the TV? Or are you saying stay tuned in, continue to trade, watch what's going on? What is your advice here? Because you have the ability to say this.
Look for opportunities. Look, there's one or two things. You can be long, you can be short, or you can be completely square. Those are your three positions. You can say right now, is the world going to come to an end, as some of the people are beginning to say, oh my God, he's crazy? Okay, I believe, in my view, the world is not going to come to an end. We're being pushed to a level where people are all reacting. Money moves first. The numbers will bear that out in the days ahead when we see who sold treasuries. As we can go back to 2001, just to give you my example of why I say money moves first, because prior to the 9/11, money had moved all throughout the market. That's a fact. They've looked that all up. They saw exactly who moved money. And what we're seeing today is an absolute, hedging of people's risk, because nobody understands what the next step is. What's the next shoe to drop? It'll all be over in a month or so. I think by June, we're going to be processing back into a normal economy that's beginning to have all this behind us.
So I said 6 or 7 different things around the world. What should people pin it on? I mean, because we're still living with the president for 3 years and a half, right?
That's right.
Still going to be tweeting. Do we still live on his tweets? Do we still live through that, or is it based on the fact that something will break and China will be fine, Taiwan will be fine? What are we looking for? Because I just saw the consumer sentiment number comes out at 50.8. That's a really bad number.
But I mean, why shouldn't it be bad, right? I mean, we just lived through the month of that's for April. That's for April. So anybody out there is going, what the heck? So what do we look for? Lots of things. Watch the currency markets. Watch dollar yen. I love this dollar yen. It's a great indicator of what we want to be watching. I think last week we closed. I don't have that number right in front of me at the second. But if dollar yen begins to make a move back up, that's telling you that the safe haven rush to get out of everything and into a more neutral setting is over. So that's what I would look for in my Money Moves First segment. Watch the dollar yen exchange rate. If that continues to drop, then this is still a very unsettling environment. I personally feel the lows are in place. Today is the last day of it. I think Monday we come out. Over the weekend, what you have right now is weekend risk. Weekend risk has always been to the downside.
Yeah.
Today, the weekend risk is to the upside because if
Right.
one comment comes out that the president and the president of China are going to set up a meeting, but boom, you've got to cover. And
Gotcha.
that's the point that I'm trying to say of the F1 racing. What you're seeing is the latest and greatest in the speed at execution going on in these marketplaces. 4.7 trillion was lost on an erroneous headline. What happens if a headline comes out Saturday evening with all the markets closed? Where do you think it's going to open up in New Zealand on the first price that you can trade upon?
Right.
So,
Steve Flanagan, I need to run, but I'll see you next Tuesday, man.
great. See you, Steve. Have a great weekend.
Mr. Flanagan, so let's talk DXY, my friend, 99.7 here. You know, you
Levels that we haven't seen since March of 22.
yeah,
I mean,
all the way over here.
you know, you could probably make equivalents in the stock market, levels we haven't seen since when. My point to that being that it's not like, we've dropped to levels that are off the charts. In fact, the upside was the one that was off the charts at 110 when we hit
Right.
that.
I mean, we normally, I mean, in normal times to me, we're in that 103, 104 range. So we're not all that exactly. I think that's important. That move to 110 was an elevated move.
Right.
And then the reversal back down is an elevated drop. But in theory, the mean is still sort of where we were trading here, in my opinion, right now at that 103, 104 area that we've sort of been as our midpoint, throughout most of December, January, and into February.
Right. What I can say to the viewers here and how FX can help you is, since we have now had extended moves, what this shows us is that clearly money has moved out of the United States. I mean, that's very easy
Without a doubt,
to make a statement like that. Now, it's moved where? Into the euro. Okay, that's one of the primary benefits. Look at the Swiss franc. I mean,
Right.
that's a safe haven currency. You're getting 0.25% on your money and you're buying the Swiss franc. Okay, the only reason you'd be going in and buying the Swiss franc is because, as we've always said in my 40 plus year career, in Switzerland, you're buying Swiss francs because they could bring the dome over top of the mountains and
Right.
totally be insulated from the world as the neutral country.
Yeah, no, but that is the point. I did see that Buffett did a bond offering or was involved in a bond offering in Japan also. So he seems to still be putting money outside of the US. We know that he's probably got the biggest bag waiting on the sidelines, right?
Again, this is what you learn down the road when they have to file those with the
13X.
SEC,
Yeah.
right? That suddenly they just bought 5.2% of X company.
Right.
Money managers, and Warren Buffett is a money manager, right? They don't get paid to keep money in cash. Okay,
Right.
yes, they earn interest rates, but interest rates are declining. So how long are they going to? They don't get paid. They get paid per performance, to put money to work and outperform the markets. So,
Yeah.
Very simple statement. I don't think that pile of cash is anywhere near as large as it was. I think there's probably in weeks ahead, we'll find out. But I think they're going to deploy money because a lot of opportunities exist. So to the retail viewers, opportunities are presented here. Watch the currency markets. The dollar index down under 100 was an absolute, buy. But I still feel I haven't lost my opinion. Just to give you, from my experience as a macro, I haven't lost my view. The dollar is going a lot higher. And by the end of the year, I do believe we'll be back above the 110 level. Now, am I positioned right now? I've been burnt twice in the last week. Absolutely. I'm just like any other trader. I have to respect the price in the market, but I'm watching it and looking for it to establish its pattern of lows, just like I'm watching the stock market in the US, because opportunities, when you extend the market like this, it's like a rubber band being stretched. At some point, it's got to give back.
Right.
And
Yeah, no, that's what we're seeing, and we talked about it. I mean, we just saw it. I mean, one of the things that I'll point out is I feel like a lot of people all of a sudden changed views when there was no reason to. We've talked about that some of the biggest rip your face off rallies happen in bear markets, right?
that's
We've been
right.
talking about that for months. I've been saying it. It's something I found in the crypto markets that, we haven't, while Steve said we haven't lived this since the 70s, I've lived it 5 times in the last 5 years through crypto. So, a drop of 30-40% is just an overnight, yawn. But what we see is that, what you have to be is nimble. You want to have electronic stop losses and take profits in place, because this stuff will move, like you said, in a matter of seconds. My question is, and I was wondering, with the way that the rates move differently than the dollar today, were some of these algos maybe caught off sides? I mean,
Oh
you know what
yeah.
I mean? Or you know what I mean? Where this wasn't in our programming parameter.
Oh yeah. And that's where we talk
Oh,
about
and I do want to point out, the reason I'm asking Mr. Flanagan this is that he helped develop these systems at JP Morgan for electronic trading. He was sort of the person that helped put these algorithms in place and helped look to make sure they were doing the right thing. So he's an expert when it comes to this. And it was something that caught my eye, that disconnect. And I saw you come right off when I brought it up this morning, because I said, I don't understand the market today. There's just this what should be moving together isn't, and what's moving in opposites shouldn't be in certain things. And I was wondering, so that sounds like maybe it is the algorithm wasn't prepared for this.
Right. I mean, I worked in the FX department, and I worked with an absolute incredible team of developers who did all the developing. I offered, from a trading perspective, how machinery should look to act and things. And foreign exchange, believe it or not, outside of crypto, but then we're $7.5 trillion in a trading day. Right. We are the most automated market in the world's financial. So what you're seeing here is automation at its finest, and that's really, if I've gathered with your question, the breakdown in the correlation models. Remember, everything is electrified, everything is plugged into a model, and the model sits there and says, let's just say I have $5 in which to manage. The model, I plug it in, and I watch the gold, I watch treasuries, I watch crypto, I watch the FX markets, I watch the equity markets, not only in America, but globally.
Around the world. Yeah.
And they're all plugged into my model. And it says, okay, for that $5 to get maximum performance, I should have some here, some there, some here, some there. I should have some JGBs, some gilts, but then I want to be in the US market. I want to be in the DAX in Germany. So, and it balances. And as the prices in the world change, the input changes, and it says, sell this, buy that. So a model is in perpetual motion.
Right.
The most popular model in algorithmic trading is called a mean reversion model. A mean reversion says, in the last year, 6 months, 1 week, how many times has the NASDAQ moved 10% or more? Never. Therefore, the model says I must sell. So when you had Wednesday's sharp move up, Thursday was like a no-brainer.
Well, you and I hit you up right away, as you know, on the show Thursday morning, because I was expecting that drop. I said it. Steve was still, we're going to finish higher, and I'm like, no, we just don't. You don't do that you do it in hugely bull markets, but in a neutral market into a bearish market, no, you rip up, and like you said, mean reversion comes, because the computers are programmed to do that, and so many traders have been taught over the last 4 years that this is how you trade. Mean reversion is like the number one trade that every trading, firm out there teaches their traders and teaches retail traders.
Now, where these get really buried is when the market does not go according
doesn't react, right?
and
we're seeing it to the downside a little bit right now, right? Where, like I said, now it's turned around significantly. So I'm happy to see that, because I do want to bring up, and again, you come from the world of banking, although now it's going back. I mean, you want to talk about volatility. I'm going to bring up some charts, because this is just insane.
Yeah.
Steve, I mean, I've been watching Morgan Stanley here this morning, not Goldman Sachs, JP Morgan, and BlackRock especially, because they all had earnings. And look at this. I mean, on a 1-minute chart, you went down to 102, you went up to 108, and now you're back at 105. I mean, these swings are this is huge amounts in just a matter of seconds, where you're seeing 1-2% moves either way. like this, and that's not what we were used to seeing. And
And
my concern has been that everything that I read, and I don't know if you've had time. I know you're running around, but if you looked at any of these earnings reports, I mean, all three of these guys nailed it. They blew it out of the water. Their forward-looking projections look great. In times of turmoil, everyone's trading 48% increases in revenue and trading over quarter one. What else do you want to see out of a company like Morgan Stanley? And it's down, a half a percentage point.
what's going to end up happening is, remember, if I'm used to trading something that moves 10 points in a day, I've tweaked all my algorithms, right? Now suddenly I'm getting 1%, 3%, 10% or more move in a day. I'm tweaking my algorithm. Now what's going to happen is volatility, in my view, my call is going to come down, and it's going to come crashing down. I think today is the last day of volatility. I actually think that next week, despite all the geopolitical events, you'll have your moments of volatility, but people are going to have to tweak the models now the other way. As volatility begins to not move 10% in a day, it only moves 5%. They have to adjust. Now it's moving at 3%. They got to adjust. So I expect volatility to peak and begin to come off into next week's trading.
Yeah, I agree, but I disagree. And what I mean there is we've never seen it stay this highly volatile. We were looking back earlier on the show for this amount of days. I wonder if we're seeing a new norm where the VIX that normally traded, in my opinion, at 15 as being sort of your average, it's actually really down more than 13 if you look at numbers historically. But to my mind, anything below 15 was in your normal range. And do we, under the tweet administration and the tweet analysis outweighing, technical analysis, do we see where we trade at 35 or 40 on the VIX for an extended period?
Again, Howard, I gotta back you up a bit, because volatility has been high for this entire year. So we are 4 months into a higher and higher and higher. My view is, yes, the baseline.
But we really haven't. In other words, here it is. Here's the VIX. We haven't. Like, in other words, no. It's been in its range. It's been very common to what we've done. It's just been more volatile up and down. But this is, this 22 handle held throughout everything until, April 2nd. It did what it normally does. That's where I'm like, no, I don't think that is the case. I think that this is not something, again, if I go back here on daily or even weekly, you don't, even during COVID, it was a quick run up and a quick run down. It wasn't where we stayed. And maybe we do. Do we find volatility is just the way the market is until June? You know what I mean? That's all I'm saying is, like, I'm with you. I think that I think we're in a topsy-turvy but sideways market maybe till June, where we're going to see advanced volatility in the intraday. But overall,
let me clarify. Yeah. I believe volatility will come down. I believe the peak is seen, but it is on an elevated.
Okay, that's all I was saying. Yeah, that's what I just. Yep. Yeah,
it will be elevated.
I want to warn our newer viewers that have only been doing this again for a year that think that it's going back to 13 and it's going to trade at 13. That might not be the case for a little while. When we say down, I think I don't want to speak for you, but for me, I'm looking for it to get below 40, and then I feel like I can start trading today. That's the today, and then I'm hoping next week down 30s, and then we do it. I don't think we're going to see the flush in volatility until there's too much money moving everywhere.
Right. I don't think you'll see a flush in volatility. I don't think you'll be back into those single digit or 10, 15 levels. I do think you could easily go into a range of a 20-40 type of thing.
I'd love to see it. I'd love to see that.
And I think what will happen is the markets will begin to consolidate themselves first. And that's why I say watch the dollar yen, watch the dollar index. First, money has to have moved. It's a Friday. typically nobody who's got to move money is sitting there on a Friday going, hey, I still have to move 500 billion out of the, no,
Right.
that's done. And when you move, as we've talked about, if you're trying to turn an ocean liner around in a lake, the only way to do it is to take a big giant boulder and drop it and get out and get done. Because everybody sees you coming, and the front running in the marketplace in the electronic space happens. So that's what I believe we've seen. And I think now you're going to go into this period where now we wait for the next tweet, and that's where you'll see the spikes in volatility. But in general, I would think that it begins to trade back off.
I will have to say you would have been proud of me, Mr. Flanagan. There were some folks that are in the crypto world sort of that also dabble in forex, so to speak, that were trying to put bets off that saying that the now is the time to get into the euro, and that the euro is going to kill the dollar's done. There are these nationalist people from around the world, because in crypto you deal with a much more worldwide sort of Twitter world than you do here in the US stock market. And I took all the bets they had on Bitcoin. We put it all into escrow already, and we're ready. I said, you guys are crazy. King Dollar will be back before the end of the year. My man, Mr. Flanagan, is the guy to answer that. And he knows. So I'll be coming after you, mister.
You're going to be taking me to task for sure.
Yeah, I will, but I agree. No, again, I didn't do it just because of you, but, I've been listening to you for 6 months, 7 months now, and learning these markets, and just every reason they gave is wrong, because they're not looking at the economies of those countries. They're not looking at the fact that the EU has already moved down that interest rate, so that advantage is already there. All the things that are in place for why people might choose the euro today is in place. It won't be in place, hopefully, in 3 months. It shouldn't be in place in 3 months.
And, for our viewers, we've never seen market like this. Okay,
Yeah.
Understand, 45 years now of trading, never seen a market like this, never. So this market goes in that little collection of markets that I call unique markets.
Yeah. No, and I think that's so important. Again, Stephen brought it up earlier. Michael Litt, a legend like yourself in these trading business. Scott Bauer, all of you have 40 years plus experience. You've been through the thick and thin, but everyone's saying the same thing. No, this is I've never done, this is not, Michael Litt said you had to go back to the early 70s. I think that even that, that I guess that'd be the Cold War, right? That's what you're really talking about, where again, Cuban Missile Crisis comes up on one day, the next day we're all in love again, and the next day we're ready to go to war with Vietnam. So,
remember back in those days, I had
no electric trading, and there was no electric trade.
I picked up a phone, I dialed a number, and I said, "What is the price? Hold on." Well, I can't hold on. I have to get out.
Yeah, I mean that it really is. And it's funny to see, because again, you and Steve were a little bit on different things. And I do think that the government and regulators will have a lot to say before computers are allowed to sort of on their own trade. Right. I agree. I think what will see more and more of, though, is you'll see retail traders will have access to algorithmic trading and great bots that will add to this electronic trading, but those decisions still sort of get made, how you set it by the individual person. I get what he's saying, where computers are going to teach themselves, and they will. And again, what you'll see is they'll suggest the trade, very quickly, and then maybe someone has to execute.
And then a human will be there. I mean, we've had that for already plenty of years, where, the human then says, okay, you want an idea? Look at 1986. Go to my LinkedIn page, and you'll see me with 2 phones trading. And that's
I know. I saw it. I love looking at that photo. I love it. Number one, the mustache was legendary. I've never mentioned that. It was legendary. You need to bring that back, I think. I don't know how your wife would feel about that, but I think it's the way to go.
She calls it scrubbing bubbles.
But I loved it. But yeah, I mean, that's, and we joke about it, but it isn't that long. I mean, again, when I was younger, 10, 15 years ago, that's how you traded. You called the broker and you said, hey, I'm looking at I remember my boss, even, in 2003, first thing he'd do when he walked into the liquor distributor wasn't looking at what the liquor numbers were. He had me to do that and tell him what was going up or down or how we were doing. What he did is he pulled out the Wall Street Journal and he had his stocks down there, and he had his little pencil, and he'd be circling things. And then I'd see him get on the phone. He'd call Charlie. Hey, Charlie, I'm looking at this, and what's it at? And yeah, give me 2 shares, and yep, let me do this and that stuff. And then Charlie had to call someone to execute it, because this was even before he had a Bloomberg terminal to do it. So yeah, the world has definitely changed over our lifetime when it comes to how and when you trade. I mean,
right. And let's, if we start at zero, which is where we were, let's say December 31st, and then we go into this year. And now clearly money has moved out of the United States. Okay. How long does it stay out? It was here, so it's out. So they're now short the dollar, and they're long wherever they went. How long does it stay out? What happens if the U.S. economy continues to grow and stay ahead of the pace where everybody else is? Remember, Europe's going to cut rates again because they've got virtually no growth. Okay, they're 0.5%. But
yep.
So, and that's my point to the viewers, is that remember this move. This is in Steve Flanagan's unique trading. I've never seen a market like this before. But what I can tell you is that when the rubber band has gotten stretched, which it is, there'll be some sort of give back. Now, who is the first one to begin to give back? And that's
right.
The trade you want to watch.
And I guess the question would be how much. I mean, we know China is has been such a big player in our treasuries and some of these things. That's the big what if, right? How quickly do they come back? Isn't that the answer?
Yeah, well,
and they still want to make money. They still need to make money. I mean, again, nationalism and patriotism in all countries is great until you have to answer to a shareholder, a stockholder, or a high wealth individual that you've been investing their money for.
You killed it there. And guess what? China doesn't have to answer to anyone.
Yeah.
Right? So that's the big difference there. China has already entered into a deflationary spiral. Want to understand that? Look at Japan for the last 25 years. Okay. So China, valuations are going down. It's a deflationary sucking sound. It just removes all value from everything. Real estate, their equity markets. China is a big problem. Trump knows it. The United States knows it. And China is now sitting at the card table, and suddenly their chip pile is diminishing rapidly.
Right.
You got to view the world in simple ways. That's what's happening. China will come back to the table. Look, if they don't come back to the table, it doesn't matter what you're trading, because it's all going to be
crap. Yeah, I mean, it is a great point. We laugh. It's not something to laugh about, but if you don't laugh, you cry, first of all.
Right, that's
but it's also something you got to be honest about. You're right. It's one of those, if they want to go into a trade war, these two leaders, they will, and everybody will lose. Everybody across the world,
and because it's in no politician's benefit to lose. Right. So therefore, they must come to an agreement. It's just simply, it's like watching the Baccarat game that's behind the ropes. You're not allowed in the room, because when they push their hand in with the chips, those chips could be billion-dollar chips. And
we saw that, right? But that's why we saw them come off, right? Because Secretary Treasury went to the president and said, hey, this bond issue last night was a big issue Wednesday. We can't afford to refinance all our debt at 4.5% and whatever it might have jumped up to. So I guess that's the great equalizer that we have to keep an eye on right now. I mean, I don't normally watch those auctions that close, but I guess that's really one of the first places I need to really be focused right now, I guess.
Right. And in my world, the way I look at things, and again, this is my opinion with zero evidence behind it. I just want to make sure I say that I look at this as China basically saying, okay, we have 900 billion of your treasuries. Here's 400 of them. Boom.
Yeah.
And the dollar, everything reacted. Interest rates spiked.
Well, like you said, that was basically, so now I only have 400 left. You know what I mean? I can only move it so much the next time.
Right. And
diminishing returns.
But China's fully aware that we have to refinance our debt, and they're looking at interest rates going up. That's the poker game. They're like, okay, you raised me, boom. And that at that level of playing, that's what we as the retail investors now, that's where I am now. That's what we have to understand. Let me sit back and watch this game play out. I'm behind the ropes watching in at that table, and
Yeah.
I'm waiting for someone to say, I fold.
Yeah. Yeah, we are. I mean that's where it's at. I mean, that's why, like I said, I'm more of standoffish than Big Beat is. I am more of playing the hand in front of me for the day and then getting neutral almost every night. Because there's plenty of money to get made. The volatility is there. If you're a momentum trader like I am, or a mean reversion trader, buying the dips, selling the rips is working really well right now. Mean reversion's working really well right now. Giving up 1 or 2 points to follow works well when things are moving 10 points in a day. I'll take 8 of those 10. I don't need all 10. I'll wait to see that it's going. That's what I'm advising people, and my system seems to be the one that's been the most profitable over the last few weeks, is that
And
system.
I concur and agree with you 100% that once the main poker table, once the players get up, shake hands, that there'll be plenty of opportunities in the financial markets across any spectrum of market to get in and trade. So
Yeah.
if you're going to trade in this, trying to outguess what the marketplace is doing, good luck.
Yeah, we don't play guesses. We don't play hope. Steve said your charts don't matter. They absolutely matter for the way that I trade on scalping and doing these things. I mean, every morning I'm able to sit here and look at the VIX and look at the Qs and say, this is the key level. If it doesn't break it, and I cited on the Qs this morning, when it couldn't break 445, if it didn't, or 450, excuse me, when it couldn't break it, that's the number. If it breaks 450, I'm ready to follow. You know what I mean?
And I was telling you, I was dollar bull, dollar bull. I said 102.80 holds in the dollar index, but if that level breaks, I am going to respect it and say something is wrong. Something's amiss.
That's all I'm saying is that, you can trade this market successfully. I don't want people to think that you can't trade. What you need to be is quick. You need to be nimble. For me, that's going neutral at night because I'm not much of a hedger. You know what I mean? I don't play in that kind of big money. I'm doing little bets here and there. So, I'm good with the way that I play it. And, if I make a few percentage points a day, I'm happy as can be.
You must be disciplined. That's the key.
And that's it, is exactly. My take profit and my stop losses are decided before I go into these trades, and they don't get touched. The only thing I might do is raise a take profit when I saw a day like Wednesday. I let things run a little bit further, and I'll be the first to admit it. I didn't run it all the way to 4 o'clock. Around 2 o'clock, I started getting a little too happy, a little too nervous. I said, you know what? I'm good. I'm out. Yeah. Let me put some trailing stops in place, and we'll see where this fell. And it went up a little bit more, and I lost out on a couple of points, but again, had the most profitable day that I've had in 2 years of trade, in the last 2 years of trading on Wednesday. So, those days are available. We've talked about it. Have your cash on the sideline. I will say I'm seeing the Q with a nice on the 1 minute double bottom here at that 442. So I do like that for a bounce back mean reversion again on the short 1 minute chart here to come up. Those are the ways to play it right now. Mr. Flanagan, what do we have on tap for next week? Do you have any of that stuff up for us?
I don't have a lot, but what I do have is my big thing is I'm watching on the big level is ECB is next Thursday. And I want to watch what they're going to do. I expect them to cut rates again. So they are very quickly moving down into the 2% zone. If you look at the inflation numbers that have come out this week throughout the world, inflation is coming down. The US PPI today at 0.4 minus, and on the year 2.7, that's coming from 3.3. At what point do the central banks of the world say, how long are you going to hold rates up here?
That's what scares me, because we saw Collins come out today, Kashkari come out today, and I forget the third one that I saw come out, and all of them saying no. This uncertainty, it's almost like the vendetta versus the president is getting in the way of solid thinking here.
This is the academic approach of a central banker. Textbooks say, and my history of 30 years says, and the whole thing that we've discussed today, throw it all out. It has no relationship in general to today's marketplace. While I'll say it can be useful It's not something to drive the automobile, the
Right.
car.
Not looking backwards. I mean, these lines, it was Musellum. I'm closely monitoring whether the rise in near-term inflation expectations seeps into longer-term ones. So I was looking in the rearview mirror, but now the rearview mirror is all rosy and clean. So now I'm going to tell you that I'm changing the goalpost, and now I'm only going to look way in the future.
To people like this, I would love to have them sitting right opposite and say, okay, and if that happens, where do you think growth will be? Zero, maybe minus. So
That's
what
what
are
I
you,
mean, and that's the
what are you
disconnect that
talking
I've
about?
talked about. Why it becomes hard for me to say I'm ready to throw my money in and go long, because I just think there's so many different things at play right here that you just got to be watching it, and it's not just one of these Fed speakers. It's been three today. Collins did the same thing. Kashkari said we might go up. We got to keep everything on the table.
What
What are
they
you
have to
looking at?
realize, what our central bankers throughout the world have to realize, is there is another gear to use, and that's called growth. If
Yeah,
growth outpaces inflation, and inflation is 2.5% or under 3%, if we can grow at 4% or better, so
that's
be it.
good.
That's
Yeah.
good.
We'll all take that and say thank you at the end of the year. I'm with you.
But the longer they are restrictive in policies, they are driving growth down. Well, guess what? Growth is what all of us people down here on planet Earth have to deal with.
Yeah.
So, they've got to begin to educate. And that's why I watch Fed Goolsby so carefully.
He hasn't said a
Because,
word this week. I've been looking. Did you see
well,
anything?
he
I've been
did.
trying
He did come out and
Okay.
talk about a tariff is like stagflationary shock, and it's very challenging for the Fed. So it's difficult to draw opinions. Yet he did offer an opinion saying our goal is to find through this line, not jump to conclusions. But that he's already given an opinion about stagflationary shock that tariffs are. So I don't know. I don't relish their job. It's difficult. I get it, but they've got to start looking through the windshield, which is a much bigger object than the rearview mirror.
Absolutely, without a doubt.
So
Yeah, and like I said, I'll just point out that Q's moved from 442 to 445. So it's exactly like I said. If you scalping this stuff, throwing a trailing stop, you boom, you just nailed it again.
that's
It's
right.
these charts are working. It's just looking at them on a much shorter time frame, and your trades are in a much shorter time frame. I was talking
No,
with Jeremy Vreeland, one of our big traders here at Quasar Markets that works for Bullish Bears, and he was showing me his future account. I think his longest trade on Wednesday was like 3 minutes.
I was
You know,
just going to say we used to have people in the room who would say, "I don't know, what's your view?" And you'd get up and you'd say, "I have no view. The view of the day, stick and jab. That is
yeah,
all you have to do. And this
and
is
that,
a great market to trade stick and jab. It's a
yeah,
lacrosse term.
yeah. His average winning trade time was 2 minutes and 26 seconds.
Look at that.
Uh,
Yeah.
you know what I mean? His longest trade that day was 13 minutes. He made 29 trades, by the way,
Right.
in one day. And this was only, I think he was only doing MNQ. But we were just comparing stuff because it's just, this is where there's only been a few of the people that I talked to that have been very successful over the last few weeks. And he was one of them that every day in our group of 50 traders that are putting in this stuff, everybody's like, and Jeremy's been like, well, I had a good day. And I've been sort of like, yeah, I had a pretty good day. And we were comparing notes. And what we've noticed is we're not swing trading it. We're all averaging, 5-10 minutes a trade. It's scalps. It's pre-programmed in. He's the same as me. He's setting his take profit. He's setting his stop loss, and he's hitting the button, and then he's closing his eyes. And I don't mean that like it's a hope and a prayer. Again, he's setting it all up because of his scalps. But whatever his system is, it's working. So that's the way to
Yeah,
trade
I
it.
know. I'm dealing with messaging all day from my nephew Kevin, who is sticking and jabbing and going, "This is great. I'm loving this."
Oh yeah, come on, Unc, come on. You can't do this, and those, and that's just hey, it's a different trader out there. I love it. I love to see that, and I love that some of these kids are doing it so well, and get it. And hopefully they're listening to folks like you and myself that have been doing this for a while that are saying, hey, listen, you can trade any market. You just have to have the right setups,
That's
and
right.
you've got to have the right thesis. And my thesis is right now, I am just looking for repetitive where it gets knocked down or knocked up. And you're seeing these numbers. It's price action, right? I'm using more price action, I'd say, than anything else right now. I don't need an MA. I don't need a lot. Give me a VWAP and let me look at price action. And, if something's been knocked down at 450 17 times, if it breaks through 450, it's going to run. When it finally gets through and it wears out those sellers, what happens is it takes off and the other way, the other. So, it's getting back to basics, right?
The price tells you everything. And I would always emphasize price tells you everything. The data don't lie.
Absolutely. Well, I'm going to give you the final word. I appreciate you hanging out a lot longer than normal, but this is, just so good to give people this insight so they understand. And like I said, I knew that you were going to have the answers on those algos and how that worked out, because that's what you helped set up at JP Morgan. Yep. And that's so important for traders to understand. And, that's the other thing I'll point out. I've made it very clear. I don't trade the first hour of the day anymore. No way. I'm not fighting an algo. Algo's better than me. An algo's got more power. It's got more gunpowder behind it, and it can act quicker than my finger can.
Yep.
So I let them fight it out in that first hour and the last hour of the day.
Okay, so next week I do expect that would be my that I do believe we will see a lower volatility. I think you have a lot of weekend risk here. That we could see news events come out on the tariff front. That's a major risk in today's positioning. And the big item to me is Wednesday and Thursday. On Wednesday we have let's see, if I just look back, you had the RBA Australia this week that did nothing with rates. New Zealand lowered rates another 0.25%. And on Thursday, you have the ECB presently at 2.5. I expect a cut to 2.2. And we have one more central bank, Bank of Canada, on Wednesday at 2.75%. Given this, they have an election coming up at the end of April, I do think that they will cut rates one more time to 2.5% and plateau at that. So a lot of excitement out in the interest rate world. Interest rates are the tectonic plates underneath of the currency markets. The move in the dollar right now has been against that interest rate. As U.S. rates have gone up, the dollar has gone down. Watch for something to begin to come a little bit more clear as we enter into next week.
Awesome. Thank you so much, Mr. Flanagan. I agree with all that. We'll see you back on Monday. Have a fantastic week. Who do you think wins the Masters, more importantly? You watching this weekend?
I'm watching. I only wish that I could do what they do with the ball.
I'm with you. I wish I could just do it once. Give me one drive like DeChambeau and I'll be happy.
When they hit the ball and go around the corner, and just like, how did they do that? I go through the trees and always be good.
Just remember that if you weren't, one of the best lines that was ever given to me was by a professional golfer, Fuzzy Zella, who I was lucky enough to play golf with when I was working with Kettle One, and he was one of their spokespeople. And I hit the ball, I hit it, behind the trees, and he looked at me as I got ready to try to hit over the trees or through the trees or under the trees, and he said, "You weren't good enough to miss him the first time. What makes you think you're good enough to miss him this time?"
That's great.
Hit out to the left and let's get going.
Yeah.
So that's how I'm going to trade today. I'm going to hit it out to the left and let's get going.
Yeah, there you go. Good.
Have a great day, sir.
See you next week.